Alright, so somehow I missed this story a couple of weeks ago when it dropped, but I really wanted to cover it because I think this is an absolutely perfect example of corporations saying the quiet part out loud and revealing some of the underlying class antagonisms that are baked within the capitalist system. So here from The Intercept's Ken Klippenstein and John Schwartz, they say Bank of America memo revealed. We hope conditions for American workers will get worse. Okay, we hope that conditions for American workers will get worse. So let's get into some of the details here. They say a Bank of America executive stated that we hope working Americans will lose leverage in the labor market in a recent private memo obtained by The Intercept. And they say making predictions for clients about the U.S. economy over the next several years. The memo also noted that changes in the percentage of Americans seeking jobs should help push up the unemployment rate. Okay, so understand, they are describing how under a capitalist system, they rely on a pool of unemployed workers in order to both, drag down wages and benefits for people who are employed, and also to make sure that, people who are unemployed are more willing to accept jobs with shittier benefits, shittier working conditions, and lower wages. So they're pretty much, again, just screaming the quiet part out loud here and revealing how corporations and workers' interests are fundamentally opposed to each other. But they continue here saying the memo, a mid-year review from June 17th, was written by Ethan Harris, the head of global economics research for the corporation's investment banking arm, Bank of America Securities. And they say its specific aspiration is, quote, by the end of next year, we hope the ratio of job openings to unemployed is down to more normal highs of the last business cycle. So again, understand when they say normal highs, they are yet again describing how they are relying on, corporations and capitalists are relying on a greater pool of unemployed workers in order to basically make their labor costs cheaper on the back end. So, fucking over workers in the process, fucking over the entire working class, people who do work for wages, while managing to increase their profit margins because they are saving some of that money there. But they continue saying the memo comes amid a push by the Federal Reserve to cool down the economy, informed by much of the same rationale that high wages are driving inflation, which is absolutely not the case in terms of what's actually driving inflation in the American economy. At least we had two major factors here. We had initial supply chain breakdowns due to the pandemic, which even that shouldn't really be considered an excuse for these corporations to raise prices, because we have a high degree of monopolization of vertical integration of these supply chains. So these corporations are supposed to have built-in cushions basically for the instance of something like COVID or supply chain breakdowns. They're supposed to have a lot of that resiliency. Obviously they don't, and they somewhat use this the pandemic shutdowns and the supply chain breakdowns as an excuse to artificially raise their prices beyond what just the increased supply side costs would have dictated. So two main things: you have the initial supply chain breakdowns, and then you also have just straight up corporate price gouging and using the narrative of inflation to make record profits in a moment like this. But again, the idea that like high wages are driving inflation is just completely void of any evidence whatsoever. And even if you want to go and look at what the chairman of the Federal Reserve, Jerome Powell, has openly said about this when he was questioned by Senator Elizabeth Warren on it, he basically openly admitted that the current Fed policy of raising interest rates is not going to do anything to bring down like food or gas prices or any of the other major price increases that average Americans have been facing. So even they admit that their own current policy is not actually going to solve the issue of inflation. And the reason for that is, again, because the issue here is not demand. It's not that people have too much money right now and that they're spending too much money on commodities and that's dragging down the supply, and so there's not enough for it, so they have to raise these prices. It has absolutely almost nothing to do with demand, especially not like surplus money being in the hands of working class people. It has much more to do with these corporations seeing record profits. But basically the Federal Reserve's policy right now is flipping that on its head, and instead of doing anything about the corporations who are making record profits, they're choosing to basically punish average people who need to take out house loans, people who need to take out car loans, credit card loans, etc., anything like that, just things that disproportionately harm working class people. So the Fed's policy is perfectly in line with the interests of Bank of America and all these other capitalist schools, but it is fundamentally opposed to the interests of average working class people. But they continue saying that this year, the Fed has increased interest rates for the first time since 2018, and historically, this has often caused recessions, and that is exactly what appears to be happening right now. And they say the Commerce Department reported Thursday that the gross domestic product has fallen for the second quarter in a row, which is like the usual technical definition of recession. Honestly, I don't really care if you call it a recession or not, because the reality of the American capitalist economy is that, whether or not we're in a recession, whether or not we're seeing higher degrees of inflation, kind of just skirts over the main underlying point that our structure of our economy disproportionately benefits the wealthiest people within society. We've seen the reports like that one from a couple years ago from Time magazine, where they showed that like over $50 trillion over the last 50 years has been basically siphoned off of the backs of the bottom 90% in this country and shoved into the pockets of the top 1%. So, whether or not we're technically in a recession, whether or not we're seeing inflationary pressures in some form in the American economy, the fundamental underlying reality that capitalism is dicking over average workers still remains the same. It doesn't matter if we avoid a recession. It doesn't matter if we manage to slightly tamp down inflationary pressure. That underlying reality is still going to be the same. It just so happens that the same reason why average people are getting fucked over by corporations in normal times just so happens to be the same reason why they are getting fucked over by corporations while we are going into a recession and while we are seeing inflationary pressure, as well as getting dicked over by the government and the Federal Reserve, which serve the interests of the capitalist system. But they continue here. It gets even better. They say, what the memo calls a ratio of job openings to unemployed is generally calculated the other way around, i.e. the ratio of unemployed people to job openings, and the more widely used ratio offers one measurement of the balance of power between workers and employers. The lower this number, the more options unemployed people will have when searching for work, and greater opportunities employed people will have to switch to jobs with better pay and better conditions. Again, that concept that I was just describing there. And they say that the current ratio is standing at roughly 0.5, meaning that there's roughly 2 job openings per unemployed person, which is pretty relatively low, especially over the last couple of decades. So you have somewhat of a more tight labor market, I guess that you could say. But even then, we've seen workers have like tiny increases in the amount of leverage that they have in terms of like fighting for unions, fighting for better pay, fighting for better benefits. But of course, none of those things are willingly going to be done by these corporations. They are instead choosing to use a lot of the excess profits that they have right now on shareholder dividends, on stock buybacks, etc., while continuing to try to cut labor costs instead of rewarding their workers for the value that they are providing for these corporations. But they continue here saying that this recent unusual moment of worker leverage made Bank of America quite anxious. And the memo expresses distress about a record-tight labor market, stating that wage pressures are going to be hard to reverse. While there may have been some one-off increases in some pockets of the labor market, the upward pressure extends to virtually every industry, income, and skill level. So again, they're just describing a fundamental class antagonism here that, Karl Marx wrote about, plenty of other economists have written about as well, where, the interests of capitalists who want to crush wages, they want to crush benefits, crush every labor cost that they can, is fundamentally in opposition to the interests of workers, which is to get as much pay as you possibly can, as good of benefits, as good of working conditions as you possibly can. They're just openly describing that concept here, and you can see how tight this community is, this community of capitalists, how deep their solidarity goes there, which again kind of gives us a lesson that workers need to be having the same type of solidarity, the same type of collective agenda to be fighting for, because that's exactly what the capitalists are doing as well. But they continue here saying that the memo is an uncanny demonstration that the economist Adam Smith was right when he described the politics of inflation in his famed 1776 work, The Wealth of Nations. So, I'm pretty sure all of us learned about Adam Smith in our economics class in high school or college or whatever, but not sure that many people have been exposed to this portion of his writings. He said, quote, "High profits tend much more to raise the price of work than high wages." And he says, "Our merchants and master manufacturers complain much of the bad effects of high wages in raising the price. They say nothing concerning the bad effects of high profits. They are silent with regard to the pernicious effects of their own gains. They complain only of those of other people. So even Adam Smith, who was like widely known as one of the like godfathers of capitalism and free market economics, even this guy was trying to demonstrate that it's not workers' wages that are usually driving up the cost of goods or commodities. It is usually, and we're seeing this right now with inflation in a potential recession, it is usually excess profits that is disproportionately going to cause that increase in prices. I mean, you can see this perfectly with an industry like the oil industry, right? I mean, oil is a little bit different because it is something that is just outright controlled by a cartel, but still, I mean, you can see that all of these different companies like ExxonMobil and Chevron and BP, they are all reporting billions of dollars in profits right now, record profits that they haven't seen in years, while simultaneously average Americans are having to pay higher prices at the gas pump. Why is that? I mean, you would think that if these companies were just having to raise their prices because the price of the oil on the global markets was going up, then you wouldn't see increased profits. You would just see them either flatlining with profits or even seeing a decrease in profits, but that's not what's happening right now. They're just artificially raising their prices beyond what the supply side increased costs would have dictated so that they can run out the back door with excess profits off of the backs of working class people. So, I mean, again, just demonstrating that outright, and Adam Smith in this instance perfectly putting it in perspective. But they finish off here saying that this is an especially remarkable given the role that corporate profits have played in the recent increase in inflation. And they say after-tax corporate profits stood at 8.1% of the economy at the beginning of 2020, but have since shot up to as high as 11.8% of the GDP. In an economy the size of the US, that equals an increase of more than $700 billion in profits per year. And they say these higher corporate profits have been the cause of over 50% of recent price increases. And yet, instead, the memo is focused on enticing the prospect of the Federal Reserve raising interest rates, slowing the economy, and bludgeoning workers back into line. So again, this is the reality of the capitalist system here. I mean, this is just an instance of them coming out and accidentally saying the quiet part out loud in this leaked memo that we got our hands on, thanks to, again, Ken Klippenstein and The Intercept. So, credit to them for putting this shit out, but, shouldn't be anything surprising if you understand the structure and how there is this fundamental class antagonism between workers and capital owners. They never have your best interests at heart, I mean, to say the least. I mean, this is a fundamental part of how capitalism operates. You have business owners, you have capital owners who sit at the top. They get to be in control of this authoritarian dictatorial structure of this system. They get to decide if they want to ship jobs overseas. They get to decide if they want to gut your wages, if they want to gut your benefits, if they want to fire you, and there's basically nothing you can do about it unless you have some form of collective union representation or something like that. And that is fundamentally at odds with the interests of workers who want to maximize their wages, maximize their benefits, and have decent working conditions. But here you have the Bank of America basically saying what every corporation in the United States and around the world wants to say in a moment like this, which is we want workers to suffer, because when workers suffer more, we are going to have greater profits.